Hi everyone, my name is Andrea Karle. I'm with Karle Law LLC. This mini series is Do You Need to Update Your Partnership Agreement? And I Didn't Know I Need a Lawyer, a mini series. Hey everyone, so basically the IRS changed its partnership audit rules on us. Right now, they're going to be now under this new centralized audit. Originally, partnerships were kind of harder to audit, so it was a little more difficult for the IRS to audit, so they didn't get audited as often. Unfortunately, now under these new rules, partnerships will be much more easily audited, and the IRS will have an easier time collecting taxes from LLCs and partnerships under the new centralized partnership audit rules. These rules begin essentially after 2017, so basically starting in 2018. In general, these new audit rules basically completely replace the TEFRA and ELP rules. So you might be wondering, how do these new rules impact my partnership? Why would you need a new agreement with all this? Well, it depends. Generally, the new rules make it really easy for the IRS to audit partnerships. This is because the IRS now only works with the partnership representative. This representative has the sole authority to act on behalf of the partnership and includes binding the partnership and the partners in examination. This one person essentially makes all the decisions, at least that's the way the IRS sees it. They go with whatever that partnership representative says, and that's how they go. The required adjustments are now taken into account at the partnership level, not the individual partner level. So this essentially can affect a partnership level tax. Adjustments are reflected in the year of the audit, when the audit is completed, or a subsequent court proceeding, not the year under review. So let's say it's the year 2020 that the audit is happening, and the year under review is 2018. The adjustments are going to be reflected in the 2020, and the partnership will be taxed in year 2020. It will not change the tax year of the underlying that's being reviewed. Next, you might be wondering, what are your options, if anything, under this? Are these the only thing I have to do is just take it? There are generally three main different options that I'm going to be talking about here today. One is, yep, you can just accept the new rules and move on with your life. Number two is there's a push-out procedure where instead of paying the alternative to paying the imputed underpayments at the partnership level, which is what I talked about before, there is a push-out where you push the adjustments out to review your partners. So again, this is an option you can take. The third option is just to opt out. This, I will say, is only available to certain partnerships. There's a little bit of rules around it, like you have to have less than 100 members to be eligible for the opt-out rules. However, I will note that this does not mean that there's a lesser chance of being audited. The old rules under TEFRA and ELP will apply, but again, it does not mean you're less likely to get audited. Now you're wondering, what should I do? There's all these partnership agreements. Why do I care? Well, one, you should be reviewing your partnership agreement or operating agreement. I know it's a little bit frustrating because it's hard to know when these rules come out. Hopefully your attorney is going to contact you to update your audit agreement. Otherwise, you should reach out and either update it yourself or talk to an attorney to just quickly update your operating agreement. There are many items that you should consider. Here are just some of the examples. One, do you have a provision to decide who the partnership representative is? Because this person is going to be binding the partnership and all the partners to a tax liability, do you want something in place for them to make decisions? The IRS is only going to be discussing the audit with that partnership representative. How do you want communication to happen between the partnership representative and all the partners? How do you want the partnership representative to make decisions? Should it be all the partners involved, or are they just going to have all the control? How are you going to hold them responsible? These are all just things you just have to think about. Do you have a provision in how to make the partners cooperate with the audit? Like if information is requested and they're not cooperating, do you have something in there that basically, either something that makes them liable or just something to force them to help out with the audit? Is there a provision in there in which partners will ultimately be responsible for the tax? Like, for example, what if the partners are different for the year under review as opposed to the year under the audit? Since the year under review is not going to be the year under the audit and the tax is assessed in the audit year, how are you going to make the partners who were the ultimate review year be responsible for the tax, especially if they're different partners? Is the decision to opt out, if there is the decision to opt out, does the partnership agreement consider how to enforce opting out? Like I said in the previous slide, there are very many certain circumstances that you have to meet in order to opt out. And if you want to opt out continuously every year, what if one partner wants to sell his portion to a partner that would disallow you from opting out? So you need something in your agreement that either states that they can't do that, or what happens if they do that, if it's okay, if there's some kind of approval that they need to go through, etc., etc. So it really all depends on how many partners you have, how comfortable you are with unknowns. Hopefully your attorney is going to reach out to you and update your partnership agreements on that. I want to thank you for watching this video, this little mini series on the new IRS audit rules for partnerships. And I didn't know I need a lawyer mini series. Please subscribe if you like my channel. And if you'd like, you can always visit me at thekarlegal.com. I'll post my videos there as well. And as always, please note that these materials are intended for just general information purposes only. The new partnership audit rules are pretty complex, and so this video is just to inform you that you may need to update your partnership agreement, so you may want to reach out to your counsel. Thanks.